This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Thursday, August 27, 2026, and this is the New York session. Now, let's get into it. Bitcoin is holding at 79,000, but the broader market is bleeding. The total crypto market cap is down over 1%, yet Solana has just surged 8%. We are seeing a massive decoupling between price action and sentiment, with the fear and greed index still anchored in extreme fear at 14. Is this a genuine rotation or a liquidity trap waiting to snap shut? We are breaking it down now. Before we dive into the charts, here is what is moving the needle today. The U.S. Senate housing bill includes a CBDC ban, adding political friction to the regulatory landscape. Meanwhile, PayPay, the 40% owner of Binance Japan, is seeking up to $1.10 billion in a Nasdaq IPO. And from a geopolitical angle, Cointelegraph reports Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. These headlines are creating volatility, but the real story is in the data. Apex, how do these macro and geopolitical flows intersect with today's price action?
The CBDC ban and the PayPay IPO are long-term structural narratives, but the immediate friction is geopolitical. That 700% spike in Iranian outflows is injecting a liquidity shark right into an environment where Bitcoin futures demand is already at 2024 lows. We are seeing capital rotate away from stablecoins and into high-beta assets like Solana, not because of conviction, but because of forced liquidity movements.
Let's start with Bitcoin. It is trading at $79,333, up 1.58%, providing a stable anchor despite the broader market decline. Grid, what is the technical structure telling us at this level?
Bitcoin is holding the $79,333 level, which is a critical support zone, but the chart is showing a classic divergence. We have price stability, but the volume profile is thinning out. It is not breaking resistance, nor is it crashing through support. It is consolidating in a tight range between the $77,648 low and the $80,475 high. The structure is neutral, but the lack of expansion suggests hesitation.
That hesitation is structural. Bitcoin futures demand has fallen to 2024 lows. We are seeing a complete evaporation of institutional leverage. The spot market is holding up because of passive accumulation, but the derivatives market is flatlining. There is no institutional conviction here driving the price. It is simply lack of selling pressure.
And that is the risk. You have a price holding at $79,333 on zero leverage support. If that spot buying dries up, there is no derivative floor to catch the fall. This is a hollow stability. It looks calm, but it is fragile.
Moving to Ethereum. Ethereum is at $2,497.78, up 2.12%, outperforming Bitcoin. CIPHER, what is driving this relative strength?
It is a liquidity play. The headline regarding Monad's BTC bridge, potentially adding $5 billion in Bitcoin-backed liquidity, is directly impacting Ethereum. We are seeing inflows into protocols that facilitate this bridging. It is not broad-based demand. It is specific capital rotation into decentralized finance infrastructure that can handle these new liquidity vectors. Ethereum is up 2.12% because it is the primary beneficiary of this tokenization narrative.
Technically, Ethereum is testing the $2,558.47 high from the last 24 hours. It is pushing against immediate resistance. If it holds $2,497.78, it could challenge that high, but without a spike in volume, it is likely to bounce off that $2,558.47 ceiling. It is a strong move, but it is hitting a wall.
This confirms the rotation thesis. Capital is moving from the store of value narrative in Bitcoin into the tokenization narrative in Ethereum. It is a sector rotation, not a market-wide rally.
Let's talk about Solana. It is the top mover, up 8.41% to $104.45. This is a massive deviation from the broader market. Pulse, how does sentiment fit into an 8% surge while the fear and greed index is at 14? It is a complete decoupling. The fear and greed index is at 14, which is extreme fear, and it has only risen marginally from a 7-day average of 12. Yet Solana is up 8%. This is not broad sentiment recovery. This is targeted short covering and capitulation buying in high beta assets. The crowd is still terrified, but the money is chasing momentum in Solana. It is a sentiment trap.
The chart confirms the momentum. Solana broke through the $100 level with significant force to hit $104.45. It is testing the $105.55 high from the last 24 hours. This is a technical breakout, but it is isolated. The broader market is down 1.28%, so this is a localized trend reversal, not a market-wide confirmation.
And that is why it is dangerous. You have an 8% surge in an environment of extreme fear and collapsing futures demand. This is a liquidity event, not a trend. When the short covering exhausts, and it will, the lack of underlying sentiment support means this price action can reverse violently. It is a bubble in a bear market.
Uniswap is up 5.51% to $4.50, and Chainlink is up 3.89% to $11.74. Both are decentralized finance infrastructure plays. CIPHER, what is the flow data showing for these assets?
It is the same liquidity shift we saw in Ethereum. The TD Securities headline about NYSE tokenization being an institutional turning point, combined with Bitfinex reviving tokenized bonds, is driving capital into Chainlink and Uniswap. We are seeing on-chain liquidity shifts toward these protocols. It is a narrative-driven rotation. Money is flowing into the infrastructure that will handle tokenized assets.
This ties directly to the Bitcoin futures weakness. Institutions are hesitant to leverage up on Bitcoin derivatives, so they are rotating into tokenization narratives in decentralized finance. It is a defensive-offensive play. They are avoiding direct crypto exposure while positioning for the future of tokenized markets.
LTC is the only major asset in the dataset showing negative price action, down 0.55% to $49.74. Grid, is this a sign of broader weakness?
It is a relative weakness signal. In a market where Solana is up 8% and Uniswap is up 5%, LTC dropping 0.5% indicates capital is flowing away from legacy assets. It is a bearish divergence. The market is prioritizing high beta growth and narrative plays over store of value utilities. It is not a crash, but it is a clear rotation away from legacy tokens.
To wrap up the analysis, Apex, how do we synthesize this decoupling? We have Solana surging, Ethereum benefiting from liquidity bridges, and Bitcoin holding steady on low volume. All while sentiment is in extreme fear and geopolitical flows are chaotic.
It is a structural decoupling. The data shows a market where price action is pricing in institutional tokenization narratives, while on-chain and derivatives data signal a distinct lack of institutional conviction. Solana is leading this rotation, but it is fragile. The fear and greed index at 14 and Bitcoin futures demand at 2024 lows suggest this rally is driven by short covering and retail beta, not broad-based confidence. Grid flagged the technical resistance in Solana, and CIPHER showed the liquidity shifts into decentralized finance, but SPECTER warning about the lack of leverage support is the critical risk. This is a rotation, not a reversal.
Key takeaways for today. Bitcoin is holding at $79,333, but lacks derivatives support. Solana is leading a high beta rally despite extreme fear, signaling a sentiment trap. And decentralized finance assets like Uniswap and Chainlink are benefiting from tokenization liquidity flows. Tomorrow, watch for volume confirmation in Solana and whether Bitcoin futures demand stabilizes. This has been ShadowQuant Crypto Edition. Thanks for listening. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.